Hey guys, welcome back. I hope everybody's had a really good weekend. This is the first time looking at the charts for me since last week. I had a wedding on over the weekend, which is really great. So this is just my pre-week analysis that I like to do. And there's two setups that I've come across for you guys that I want to share with you, and I'll run you through those now. So the first one is AUDCHF. Now, I did analyse this pair last week, and I did expect us to, reach down to this negative 27. However, because the pair took so long to set up throughout the week, we had all this sort of downside momentum, on Thursday. And then Friday is generally known as reversal day. So a lot of the times the market will go in the opposite direction to what it's sort of been trending all week on a Friday. So I got stopped out at break even on this trade. So, it is what it is. I obviously didn't lose anything because it was a break even trade, but the good thing is that it's still, that the short is still in play, and I'll sort of run you through that now. So first of all, we look on the daily time frame, and the first thing that I see is the head and shoulders pattern, right in front of us. Right here, so left shoulder, trend, head, break of the trend, right shoulder, retat, and continuation down to negative 27, if we are using Fibonacci's, which I like to do. So what I'd simply do in this instance is I'd put my first target here and remove that. Now we can see here that there's a lot of rejection from this sort of general area here. You can see that obviously the top of the left shoulder, there was a couple of wicks, and sort of the top of the wicks, if you look at it, is all around that general area, and it was even support here. And this general area right there, is, so say 71,750, we'll say. On the smaller time frames is certainly a quite a big area of interest, and you can see here in the past as well, we've had major rejections off this level in the past. So this is certainly an area to look for, and this is why it's so important to do a top-down analysis from the weekly, daily, 4-hour, and go that way, because it really gives you an idea of the bigger picture. You can also see here as well, if you look obviously on the weekly, we have a W formation here. This could be completion, and obviously this is going to be, your trend line. So there's a fair few confluences that tell me that it's going to be a short next week. As I said, the initial setup from last week is still in play because none of the structure broke. We didn't sort of break it back above this trend, or break above these highs here or anything like that. So I still am very bearish on this pair. If I do it on the daily time frame, yeah, okay. So look, you can see here that it crossed for a long here, and the gap was sort of widen, and now it's just squeezing. So for the last, a little bit over a week, it's really been sort of squeezing around here while we've been trying to break this level here. And I really think that we are still going to be bearish on this pair, and I am still short. I'm definitely still short on this pair. So if we go to the 4-hour, actually we go to the daily because it'll be easy to draw. And we do this fib here to here. Again, right where price is now is the 61 and 50 fib levels. And you guys know what I do to find entries. I'll simply just highlight that in a box, something like that, and try to find a bit more confluences on the lower time frame. So if we go to the 4-hour, this is ultimately where I want to be. Now, sometimes I like to draw a previous leg to sort of see if something lines up with a negative 27. So if I did it from high to high, if I did it from high to high, the negative 27 is a fair bit higher than I would like it to be. But we can always expect that to be a wick. But once again, still very bearish on this pair. I'll see if I draw a fib from here to here, if it's a... Alright, so even if you draw a fib from there to there, it's still closed. It's closed below that 78 level. So we are getting a fair bit of rejection off that. And we are retesting the trend line. A shorter term target could easily be here. But yeah, I'm still very, very bearish on this pair. It'll be something that I definitely look at. Once again, that's between the 50 and the 61.8. If I just look for closes within that area, you can definitely see here there's a lot of price action around. I'll put it in orange so it's a bit easier to see, but sort of around this area you have resistance, 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 support, and then all the way back here this would have touched on a candle, support, broke through, resistance, resistance, resistance again. So market open tomorrow, I'll probably set some kind of limit, maybe a little bit higher, or just wait for the London session. But if I had this is obviously, as I said, not a really great trade at the moment, but even if you were to put it 15 pips above those highs, even 20, so go 30 pips, you're still looking at a almost 1 to 3 risk to reward. But obviously my longer term target is down here. I'm going to be looking at 1 to 5 risk to reward here. So that's the first pair I'm looking at. The second pair is Euro AUD. Now we have a couple of reasons why I'm looking to take this trade. So first of all, I will get rid of all this stuff that I drew first. And the first thing I always like to do is find the previous leg to determine where price is currently at and where it's heading. So if I was to do this, low to high. Now, I have mentioned before that I don't like to use the flash crash sort of stuff that happened as market structure, because it doesn't really, it's not really accurate, but I will for this reason, only because the 50, even if I put it on the low one, the 50 and the 61.8 is still holding structure. So I'll put it to the top just for now to explain what I mean. And you can see for the last 4 weeks, price has been trying to break through this 61.80 level, obviously with the direction going up, because this is the previous leg. So this is the current movement at the moment. The previous leg is this, and obviously you draw it from low to high. So what I'll simply do is I'll make this a fib color, and I'll change it to 158082. So 158082, and I'm gonna mark this as weekly 61.8, and then you can delete the fib. Now going on to the daily, first thing that I can see, and I hope you guys see it too, is inverse head and shoulders, bang, 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 and we're touching the 61.8, which coincidentally is also the same level as this left shoulder, sort of tap. So straight away, that's a really good confluence for me. Draw a trend, see what we can find here. Depending on how you draw your trend line, some people might like to do it to low to low. Some people might like to touch as many candles as possible. Either way, it doesn't really matter with this, because it's still quite accurate. Obviously that's broken, but as I said, that is the weekly candle. So even if you draw it to there, that's absolutely fine. And then obviously direction's going up. This is the current leg, this is the previous leg. Let's have a look and see what the fib says. So right now it's on the 78.6, which is 158004. So 158004, and we will do daily 78.6. Now the reason I do this, guys, is just so when I take the fibs off, I can see, I can see where price is, and you can see the two confluences there extremely close together. There's a very, very small range there where we can look to take entries. Now we might even be able to see if we can find another trend that's intersecting with, to see if we can get some rejection off that as well. So yeah, so if I did something like that, obviously 1, 2, 3 taps, breakthrough, Hasn't yet retested this trend, but right now it's currently sitting right on it. Once again, if we do a previous leg, here to here, we can see that that's a negative 27 right here. Negative 27 previous leg. And I'll just mark these. Obviously, put your first target here if you want. It's not a very big target, but you know. Now, the thing that I will say is that the last movement that this created was very impulsive to the downside. So if I was to use indicators, once again, I'm not a heavily based indicator trader, but I like to see it for momentum. Okay, so it's not that bad. I thought that would be a lot, a lot more sort of impulsive. See what it's saying on the higher time frames. On the higher time frames, it's it's squeezing. So it is cut for a short here, but you can see that it cut for a long, and it's now cut back for a short. But it's very, very squeezed. So I'm expecting this pair to make a really big movement at some stage. It's all just sort of a waiting game at the moment. And once again, these are squeezed like anything. So for the last 1, 2, 3, 9 to 12 weeks, this pair has been really indecisive on what way it wants to go. So I'll remove these indicators again. But so far, what you can see is an area of interest of all these confluences. Negative 27, weekly 618, and a daily 78. Now, the thing that I will look for in this is there any sort of round numbers? And you can see that the daily 78.6 it's essentially 158, which is obviously going to be a massive level of interest. If we go to the higher time frames, we can sort of see if there's been much rejection there, or rejection there in the past. And you can see here, absolutely massive, massive rejection. We had a lot of wicks here. It broke through, had some resistance and support here, also here, right here. It's a massive area. It's a massive area. So I'm bullish on this pair. I have been bearish on it for quite a long time, but analysing it today sort of changed my perception on it a little bit, to see what direction we can head in. So I'll be looking to go long on this pair at some stage this week, and just for argument's sake, to do the example trade, if I do directly on 158, go to the smaller time frame, make that a little bit smaller, and 67 pips. I don't really like that. I think that's too big, but I think to put it, maybe 30 pips, and the reason for that is it has to break 2 trend lines. It also has to break a very strong level, and it also has to break a negative 27 on the previous leg to be able to hit that stop loss. So that would be my trade there. You can see obviously that's a almost 1 to 6 risk to reward. And these type of trades are the ones that grow your account. They're the ones that you're risking very little for essentially massive gain. And really all you need is one or two good trades a week, to be able to sort of grow an account. So that's my analysis, guys, for these two pairs. If I do see any more, I will let you guys know of them. Once again, guys, if you have any feedback, please comment below. Let me know what you think, or if you do find what I'm doing valuable, please like, subscribe, and show some support. But have a great week, guys, and I'll see you on the next one.